Welcome to Fear and Greed Business News, Australia's best business podcast. It's Friday, the 19th of January, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Now, Sean, this week's shows are shortened versions of our normal shows. Next week, as of Monday, we'll be back with full-length bulletins, normal interviews every day, the week ahead with Stephen Koukoulas, basically everything you can possibly think of to do with fear and greed, all back from Monday.
Fantastic. I look forward to that. I think it's time we end this holiday and get back to business.
Anyway, the top story today, we are talking about the new set of economic data, of course, the unemployment figures that came out yesterday. The employment market shed 65,000 jobs last month, but the unemployment rate stayed at 3.9%, which is still an historically low level.
Yeah, so the Bureau of Statistics figures released yesterday show that while there were big job losses at the end of last year, there were almost twice as many gains in October and November. The net reduction over that December quarter was 52,000 jobs. It demonstrates an economy slowing, a job market's softening from very strong levels, and the impact of interest rate rises. While there were job losses, the unemployment rate didn't change because the number of people looking for work fell. The so-called participation rate dropped from previous record highs. The 3.9% jobless rate is close to the Reserve Bank's forecast of 3.8% for December. Probably won't have a huge impact on next month's interest rate deliberations at the central bank. All eyes now, Michael, are on the inflation data due out over the next fortnight.
All right. So how did the local market perform yesterday?
It was another down day with the S&P ASX 200 finishing off 0.6% to 7,347 points. Fears of interest rates not falling as fast as expected weighed on the property companies in particular. Among the large caps, BHP, CSL, Goodman, Transurban and Santos. That's an eclectic bunch. They were all sold off. Rio and Fortescue outperformed, while Commonwealth Bank, National Australia Bank and ANZ also ended in the black. Liontown Resources was the worst of the top 200, down 10% after lithium giant Albemarle, which lost a $6.6 billion takeover battle for that company last year, said it was selling out its 4% stake. Generally, the miners had a bad day, not quite as bad as the real estate investment trusts, but all in all, a down day, Michael.
What about global markets?
Well, the big news out of China is that Beijing won't resort to huge stimulus to revive growth amid the worst bout of deflation in decades. That came out at the World Economic Forum in Davos, Switzerland. It affects many economies, including Australia, because China is such a big player in the global economy. Not a lot going on in oil, gold or crypto markets, while the Aussie dollar has lost further ground. It's trading around 65.5 US cents.
Sean, superannuation funds have bounced back from a loss in 2022 to record 10% increases for the median growth fund. That is the 11th positive return in the past 12 years.
Yes, and it's a good return. The long-term average is just over 6%. So the 9.9% figure for 2023, based on figures from Chant West, is pretty impressive. A growth fund is one that has between 61 and 80% in growth assets, things like shares. And international shares did best, returning 23%, thanks to a more than 50% jump from Wall Street's tech stocks. So if your fund invested in Apple or Tesla or especially Nvidia, well, your super probably did pretty well. High growth funds, they take more risk. They invest more than 80% in equities. They returned 13.1%, higher than that 9.9%, while conservative funds, less growth stocks, less equities, they returned about 6.2%. So you can go and check your super returns for the year, work out whether your fund is doing okay or not. Of course, a word of warning, superannuation is a long-term investment. 1 year does not make the summer? Does not make the full story? Whatever it is, Michael.
I had never heard the saying that you were mangling there, which was about one swallow doesn't make the spring or something like that. I had never heard that until you used it last year. And now I hear you mangling that one. Your attempt at a very, like a mixed kind of, just a mashed metaphor. I'm like, bring back the swallow.
See, I think people are too highly criticised for stuffing up things like bringing back the swallow and, one swallow does not make a spring. I mangle those sorts of, what are they actually called? Verses?
It's just a saying, isn't it? And then it just suddenly, when we try to twist it into a metaphor and use it as a metaphor for the market, it suddenly just becomes very convoluted and we end up getting sidetracked.
Yeah, particularly on a day like yesterday where nothing happened. Like, you don't want to come on to a show like Fear and Greed. You say, so what happened on the ASX 200 yesterday? Nothing.
Not much.
Right.
No, it's always got to be something. Well, when you were running newspapers, because you've had a very long and illustrious career.
Veteran, go on.
Did you? Yes, a veteran, self-described veteran. Now, I did not say that you were old. Did you ever run a front page where nothing happened?
Absolutely. Particularly around this time of year. And I had this boss. So this was the Financial Review. So we're talking a serious newspaper here. And a boss who used to try and make us have 30 page one stories before we went on Christmas holidays, knowing that when you get back on the 28th of December or 29th of December or whenever it was, you'd turn up and he'd say, where's the front page story? So he wanted like 30 front page stories well before the news ever happened. It was creative writing at its finest. Don't think it happens anymore.
That is extraordinary. Oh, fantastic little insight into the media. Sean, we better get back to business because we do actually still have a little bit. I know it's a quiet day. There is still a few stories to get through though, because convenience retailing is setting Ampol up for record earnings this financial year, even though refinery earnings aren't so great.
Yeah, so if you remember back to last year, companies like Ampol have really pushed into convenience retailing. Yesterday, Ampol said consistently strong performance in that area of its business in Australia and an improved result at its Z Energy business in New Zealand are the reasons that earnings should be at a record level this year. The fuels and infrastructure business, excluding the Lytton refinery in Queensland, also performed strongly. However, at Lytton, the oil refinery station, earnings and fuel volumes were hit by an unexpected outage at the plant late last year. It's since returned to normal, but that has hurt earnings. Ampol's share price hit a record level earlier this month, but analysts are worried about refinery profit margins, and yesterday the stock closed down 2.5%.
New home building levels in Australia fell to a decade low late last year, with borrowing costs soaring and higher house prices really hitting the construction sector.
New housing starts fell to 165,602 over the 4 quarters to September, the weakest 12-month total since March 2013. So keep in mind, 166,000. Keep that number in mind, Michael. Mm-hmm. That's according to Bureau of Statistics figures released yesterday. Now, the irony is that demand is strong. The number of approvals not yet commenced in the September quarter were the second highest in 5 years. But basically, people are getting approved, but not starting. Economists don't expect any pickup in the near term, though the federal government has promised to build 1.2 million homes over the next 5 years. So what's that? 1.2 million divided by 5, 240,000. So we're at 165,000. The federal government itself wants to build 240,000 homes a year over the next 5 years. So things should definitely pick up, just not yet.
Is there a reason I'm still remembering the 166,000 number?
Yes, because I'm talking about the government wanting to sell the 12 months to the end of September, 166,000 homes. Mm-hmm. The government is promising, so this isn't private investment, just the government wants to do 240,000 homes a year over the next 5 years.
Gotcha. You threw me there. You know why? Because as soon as you say anything in the middle of a story where you say, remember that, Michael, or something along those lines, I feel like there's a quiz coming up.
And you stop listening to the rest?
No, but I start to panic. You can actually see I have broken out into a bit of a sweat thinking that I was about to be tested on something. So I was just there focusing on 165 to 166,000. That's all I was repeating in my head and just panicking. So I'm glad. I was just impressed as well at how quickly you did that in your head, the 1.2 million divided by 5.
Now, those who don't know Michael and I so well probably don't realise that Michael actually topped the HSC in maths in his year 12. And he peaked. I think is probably the best way to put it, Michael. You peaked, your mathematics ability peaked in year 12. And now you say, Michael, what's 1.2 million divided by 5? Well, you get a lot of fluffing around. Pythagoras' theorem's used.
And I'll say,
add the 2.
Let me grab my calculator,
yeah,
Sean. That's
right.
what I'll say to you.
Grab the phone.
That's all right. Now, Sean, you mentioned Albemarle earlier. And of course, it's the American lithium giant. It's cutting back on its Aussie strategy in a pretty big blow to Prime Minister Anthony Albanese's plan to foster more domestic processing of critical and battery minerals.
Albemarle has put on the back burner plans to build a fourth lithium hydroxide processing train at Kemerton in Western Australia, just 8 months after announcing it would go ahead with plans to double Kemerton's capacity from 2 trains to 4. This is according to the Financial Review. It does add to the woes of the critical minerals sector, which in the past month has suffered hundreds of job cuts and mine curtailments at Ravensthorpe Nickel, Panoramic Nickel and Core Lithium's mines in the Northern Territory. Albanese and the Labor government are hoping to develop critical and battery minerals, but these sorts of news stories do nothing to add to momentum. Also, yesterday, BHP signalled it may add to the problems, warning its Western Australian nickel business was not immune to the pressure vexing the industry and cost-saving measures are under consideration.
Okay, turning to international news now, and Tesla has cut the price of its Model Y cars across Europe a week after the company cut prices in China in the face of uncertain electric vehicle demand.
Tesla reduced prices in Germany for its Model Y long range and Model Y performance by about 9%, cut prices in France by about 7%, 8% in the Netherlands, 11% in Denmark, which I think is interesting that there's so much price disparity between those countries. Anyway, let's just park that. We might come back to that. Electric vehicles and hybrid car sales growth is very strong. Global sales rose more than 30% last year. Now, the previous year, the growth, though, was 60%. In Australia, EV sales last year more than doubled to about 87,000. But the momentum is just subsiding a little bit. We talked about that yesterday, as demonstrated by car leasing giant Hertz selling a large portion of its EV fleet. The running costs are basically too expensive. These latest moves by Tesla are an effort to stem that slide. Fingers crossed, Tesla opts to reduce prices here as well. The only problem is when it's doubling sales last year, not a great incentive to cut prices, really.
No. Do you think, though, a price cut would be enough to really turbocharge the growth rate in Australia? Or do you think there is still a little bit of concern and general reluctance because of those range issues, or not even issues, but just general worries that we have about kind of driving long distances in Australia and not knowing whether you're going to be able to make it all the way without having to stop and recharge halfway through?
Love the use of turbocharge in that sentence because it is exactly the wrong word to use in EVs. The range anxiety, great phrase too, range anxiety, I think it's an issue, but I still think cost is a problem. You're still paying more than $60,000 for a car here. There's just not an affordable EV in the local market. If you could get one for 40, 45, maybe 50,000, I reckon you'd sell a lot more.
Okay, last story, Sean. China's population fell in 2023. Now, that's for the second successive year, accelerating a demographic shift that poses long-term challenges for Beijing.
So the number of people in China fell by over 2 million to 1.41 billion in 2023. That's according to data released by the National Statistics Bureau. That drop more than doubled the fall in 2022 when the Chinese population shrank for the first time since 1961. Now, 1961 was the final year of the Great Famine under former leader Mao Zedong. This is all according to Bloomberg. Deaths last year rose to 11.1 million people, almost 700,000 more than the previous year, and the highest since 1960. So we have more people dying, fewer people being born. A total of 9.02 million babies were born in 2023. That's the lowest since the founding of the People's Republic of China in 1949. It's not just China. East Asian countries generally are suffering declining birth rates. In fact, South Korea's fertility rate fell to 0.72% last year and is expected to fall further this year. That's the lowest fertility rate in the world. 0.72 refers to the number of children per female in a country.
All right. You know, Sean, for a day where you said there wasn't a huge amount happening, we still covered a bit of ground today.
Yeah, I know. Some things like birth rates and that are really interesting to watch what's going on.
Yeah, fascinating stuff. Thank you very much.
Thank you, Michael.
It's Friday, the 19th of January, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.